Hello traders, welcome to the new weekly Forex forecast for the trading week beginning on 15th of July. In the coming week, we have announcements from US related to retail sales plus their weekly jobless claims. From UK, we have inflation data coming up, and the main announcement is coming from Europe. European Central Bank is going to announce the rate of interest. So let's dive into the charts and see what are the upcoming tradable opportunities in the coming week. Okay, before we begin with the technical chart, so here a short intro related to dollar index. Now in the longer run, dollar is still looking weaker, but in the short run, it's sideways. So the picture is not very clear in the short term. So I'm not going to repeat the analysis on the chart. Now I'm going to begin my this week's trading analysis with the currency pair Australian dollar versus Canadian dollar. Now I've already marked here some important levels based on weekly frame. Now I've applied Fibonacci extension. I'm going to use, give me a second. So here, yeah. So this is the first Fib extension. So first bullish wave followed by the corrective wave. So we have applied Fib extension on this bull run and the corrective run, and we got the extension levels. Now currently AUDCAD on the weekly time frame basis, it has just crossed Fib extension 100%. And right now if I zoom out, you'll notice that it has already crossed an important level of resistance as well, this area. So the current price has crossed the main resistance, and based on MACD, I do not see any slowdown. So histogram is rising, MACD lines, they're clearly bullish. So no slowdown on weekly basis, remains bullish. Let's move to daily chart. On the daily time frame, again, I do not see any signs of slowdown. It's been continuously making higher lows and higher highs. So based on price action, it all starts from this level. So we have a low here, higher low, again higher low. Now this becomes your turning point. There was some correction in between. Now the market turns bullish again. So this is a turning point. We have double bottom, higher low, higher low, higher low. A bit of consolidation here, but followed by the sequence of higher lows. Plus, if you notice higher high formation, even on the higher high formation, there is no slowdown. Continuously, this instrument is making higher highs and higher lows without any signs of exhaustion. So weekly and daily, they both are ultra bullish for Australian dollar versus Canadian dollar. Now let's move to the next lower time frame, that is 4-hourly chart. Now only on the 4-hourly chart, I can see that the chart is still making higher lows. Continuously, it is making higher lows plus higher highs as well. So this is the latest high low printed on the chart in conjunction with higher highs. Now only if you compare the latest higher high formation, the last two highs, I can see some drop in the momentum on the basis of MACD histogram. But MACD lines, they are still clearly bullish. There is a probability that we may get some short-term corrective price action in the coming week if bearish divergence builds up on 4-hourly chart. As of now, there is a slight slowdown, but not a major reversal building up on 4-hourly chart. Now let's move to 1H. Now on 1-hourly chart, I can see that the slowdown is slightly stronger here. So the MACD is showing like substantial loss of momentum here. Plus, I can see that it has already completed bearish divergence on the basis of MACD histogram. I'm comparing the last two highs again on 1-hourly chart. Although the chart is still bullish because the pattern, the price action here is bullish. We have sequence of higher lows everywhere on 1-hourly chart. And this was the consolidation followed by higher lows and higher high. They are under bearish divergence. So on short-term basis, that is 1-hourly chart. This is the exhaustion sign we are seeing on the chart. So it means on short-term basis there might be some pullback. Now 15 minutes is definitely looking bearish. MACD has turned bearish here. Bearish crossover completed of MACD lines, and I can see that the chart is or the price is now moving downwards. So there are two options. Only in the short run, if you find confidence on multiple time frames, divergence being followed by lower high and lower low formation, you can trade short term bearish setups, but that's going to be aggressive because the higher time frames, the main trend is still bullish. Alternatively, you can wait for the pullback and join the buyers. Now let's decide the levels where we can get into the trades and join the buyers. Now here I'm back to 4-hourly chart, and I'm going to draw the rising trend line here. So I'll start from this low, and I'm going to connect the sequential higher lows. So we've got the rising trend line. I'm going to extend it further. Now until price remains higher than the rising trend line, the bullish trend remains intact. So until price remains higher than this rising trend line, the bullish trend remains intact. There could be some short-term pullback, maybe until this level, and then continuation. I'm going to draw Fib extension and Fibonacci retracement to understand the levels of discount here, the retracement here. Now I'll start from this low. Now this is the latest touch point connected to the rising trend line. So I'm going to start my Fib retracement measurement from the lowest point on the trend line. So we'll start from this low, assuming the current price is going to print the turning point here, means this is going to be the highest point. So this is going to be our A and B. So we can expect that if we get an opportunity to join the buyers around 50% price, so that is around 9035, 9034, it should be taken as an opportunity, and let's join the buyers here. Now what are the upcoming levels? Now based on higher time frame, I'm going to daily chart. Now based on higher time frame, I can see the duplication zone, the magnet zone, on the basis of multiple Fib extension levels is in between 0.9599 to 0.9630. So this is the ultimate target. We also have 0.9463. So currently we are at 0.9241. We can expect pullback around 9035 or 9050, and we can aim to exit around 0.95, the psychological round number. So this is a plan for AUDCAD. Now the next currency pair is Euro versus Japanese yen. So again, I've marked the important levels here based on Fib extensions and the support and resistance levels counted on higher time frame. Now this is the extension applied at the moment, Fib extension in the bullish direction, and if you notice, the current price is right now hovering around Fib extension of 100%. So 172 or 171.72 is an important extension level. I'm going to zoom in to look at the condition of MACD. So based on weekly time frame, again I can see there is some slowdown coming on MACD histogram. So it has not completed the regular bearish divergence yet on the weekly chart, but I can see that there is some slowdown building up on the histogram. So last two highs are with lower high formation on the histogram, and it's a containing type of divergence, so the impact could be the bearish impact could not be very strong. Maybe it's always dicey whenever we are looking at the containing type of divergence, and when we have regular bearish divergence, then definitely the impact is stronger. So let's see what's happening on daily. Now on daily, if you notice, MACD has already turned into bearish. I can see red histogram here, and we also have bearish crossover. So Euro versus Japanese yen on daily time frame, it is showing signs of weakness. Now I'm going to count again Fibonacci retracement on the daily chart, starting from the lowest level, which was printed around 154.83, which is basically going to count on the Fib retracement scale the latest bull cycle. So this is our latest bull cycle. I'm going to apply Fibonacci retracement here. So here I need to start from the lowest point and connect to the recent high, assuming that this is the point B. So if we get bearish price action, if the sellers they pick up the momentum in the coming week, then we can expect at least 23 to 38%. Now keep in mind that JPY pairs, they have been exception in the past 4 years. They have been an exceptional bull run because of the weakness in Japanese yen. So I cannot expect a deeper correction here, but even if they come to 23% or 38% level, we have good amount of moves to capture here. Now this is a rising trend line which is not yet broken, so there might be a scenario that the sellers they just take the price to the rising trend line and again give up, and the buyers can come back. So trading JPY pairs is always tricky because of the extended bull run, but definitely the weakness which is being printed on the charts in the short run, it looks tempting, lucrative to go for the short selling. Now again, fundamentally we have interest rate announcement from European Central Bank coming in the week, so there could be huge volatility in European pairs, especially in EURJPY. Now moving to the next time frame, that is 4-hourly chart. If you notice, we have bearish divergence here. The last two highs on 4-hourly chart, they have clearly completed bearish divergence on MACD lines. They have broken the support here, the BUS level, and this is the sharp drop in EURJPY price which happened in the current week, and any pullback should be taken as an opportunity to get into short-term selling plan. Now here if I apply Fib extension in the downward direction, then I'll come to know the probable target levels in the downward direction. So I'm starting from the highest point visible on the chart on 4-hourly, considering that this is the point B and this is our point C, so the end of correction here. So if you notice, we have a duplication level here. If you want, I can just turn this Fib extension bearish into red. Okay, so here we have duplication level. First one is around 171.72 to 41. So currently we are at 172.17. So not a big move on if you're targeting the first level, but if you're targeting the second level, which is again a confluence of two Fib lines coming together at 170.29, so we can capture at least, I can count here, so we can capture, let's say, short position from the current price, then we can capture around 180 pips. Keeping in mind that in the coming week we might get some bullish price action here because it was a substantial and a sharp drop starting from this high. So usually market gets into consolidation, or whenever we see a substantial and sharp drop, sharp moves, they are usually followed by a sideways consolidation, some corrective price action, and then continuation. So only in the short run I'll be looking for selling opportunities in EURJPY. Now I'm going to mark some important levels here based on 1-hourly chart. I can see that we have support here, so which will be the new resistance if market starts moving up. I can also apply Fibonacci retracement starting from the highest point to the lowest point, the visible lowest point on 1-hourly chart. In this scenario, if market goes back, jumps towards 61.8 or 70%, it will be again in the high volume zone. So we have a lot of volume here, consolidation here historically. So price may get back to the same price zone and then moves downward. Anyways, the plan is to sell on the rise in the short term. Now the next currency pair is pound versus New Zealand dollar. Again, I'll be starting from the weekly time frame, and I've applied multiple Fib extensions in the bullish direction because the currency is bullish at the moment, and I'm going to explain the latest bullish cycle. So the latest bullish cycle starts from this level, which was around 1.8731. This was the first leg up, corrective wave down, the longest third wave completed, fourth wave corrective completed, and now we are in the fifth wave of the bullish cycle. Now whenever we have 5-leg structure, it's very easy to trade on the basis of multiple Fib extension levels. Now I've applied multiple extension levels in the bullish direction, and if you notice, the currency pair has formed support around this area. So pound versus New Zealand dollar, major support formed around 2.065, and from that level it has sharply bounced upwards. Now moving to daily time frame. Now this is the level which was marked on weekly chart, so this becomes the basis for the daily chart, the support area. And now until this price remains valid, means if the buyers, they hold the price above this level, they don't allow the sellers to take the price lower than this level, the bullish plan will not be invalidated. In other words, if the sellers, they are able to break below this level, the bullish plan will be invalidated. Now on the basis of MACD histogram, I do not see any trouble for buyers. Histogram is clearly rising with full momentum. Even MACD lines, they are clearly bullish. So on daily time frame, it looks bullish. On weekly time frame, it looks definitely bullish. Higher time frames, bullish. Now let's come back to the lower time frame, that is 4-hourly chart. Now on the 4-hourly chart, we have the sequence of double bottom followed by higher lows, again some consolidation followed by higher lows. Now only on the 4-hourly chart I can see the latest rising pattern here. Sorry, so I'm talking about the latest rising pattern here. It's coming with continuing type of bearish divergence on MACD histogram of 4-hourly, which means there might be some short-term correction coming up. It should be taken as correction, not the reversal of the trend, and we should look for buying opportunity only. Now if I'm applying a rising trend line on the daily chart, then I'll be connecting the rising lows here, and until price remains above rising trend line, any dip should be taken as an opportunity to buy. If you need to understand like if there is a correction, then how deep it could go, then I'm going to plot one more Fib extension here on the latest price action. So the current level is around Fib extension 2.61. In case if we get some correction in the upcoming week, then I'm expecting up to 1.61. So any pullback towards 2.09, 2.10 should be taken as an opportunity. If you get a deeper pullback, then one second. So if we get a deeper pullback, then we can expect the correction to end around 2.089. In both scenarios, I'll be looking to buy the dips. And the target here is, again, it will be derived from the higher time frame. I'll be applying Fib extension on the weekly chart. We have already applied multiple Fib extensions here, and I'm looking for the duplication zone. In fact, I can see very strong confluence here, multiple Fib extensions. They're overlapping around 2.16 to 2.18. So ultimate target for pound versus New Zealand dollar is 2.16 to 2.18. And the next instrument I'm going to cover is crude oil, US oil. Now again, on the basis of higher time frame, I've applied these horizontal lines here, which are representing the support and the resistance levels. And let's talk about the price pattern here. This is the low, followed by higher low, next higher low, and higher low. Now on the top we have high followed by lower high. So it has formed a triangular pattern here on the weekly basis. So I'm going to apply a falling trend line from the top, connecting the highs, and at the same time I'm going to apply a rising trend line from the bottom, connecting the lows. So currently price is consolidating within the triangle, and the current price is at an important resistance level. So here, this is the current price, and the resistance was around 82.87. Now if I'm moving to daily chart, if you notice on the daily chart, the buyers, they have shown some signs of weakness here based on the continuing type of divergence coming on the histogram, and this was the first move down, pullback, retest, and successfully retest this level as a resistance, so which is around 82.87. Now if I'm going to apply a retracement from the swing low and the current high to be taken as swing high, then I'll come to know the levels of retracement. It means how deep oil can move in case it continues its bearish corrective pattern. So here we go with Fibonacci retracement. I can see that the important levels of Fibonacci retracement are 50%, 61%, and the important support is somewhere around 79.16. I'm also going to apply Fib extension in the downward direction here. Now based on the bearish price action, if you see, we have high, lower high, and next lower high, followed by low and lower low, and I do not see any bullish divergence here. So if I'm comparing the last two lows, lower low formation on histogram, lower low formation on price, which means the sellers may continue in the market, and I'm going to apply Fib extension in the downward direction, and we have two ABC patterns here to look for the confluence of extension levels in the downward direction. So first Fib extension I'm going to apply from the top, first low, and connect it to point C, A, B, and C, and the next one is going to start from C, again connecting to the low and the high form. Now I'm going to change the color here to blue. So do we see any overlapping Fib levels here? The red line and the blue line coming very close. Yes, I can see we have one at 77.8. We also have one at, this is the exact duplication, at 79. So this is again matching with my previous expectation that if sellers continue to hold the market, crude oil, okay, if they continue in the bearish direction, then the first bearish target could be 78 or 79. Further down we can reach 77 or 78. They might also bring the price back to the rising trend line level and then again bounce from there. So in the short run, crude oil remains bearish. 1 hourly chart, again I can see that the sellers are enjoying the control in the market. We have high followed by lower high and the next lower high, and this lower high is the turning point, the latest turning point based on bearish divergence as well. Now we are again close to very close to the support, recent support on 1 hourly chart, which might push price upwards short term, but it's gonna fall again based on the higher time frame. So US oil looking bearish in the short run. Once it breaks out of the boundaries of the triangular pattern, which we have taken from the weekly chart, then we'll decide about the longer run trend, okay, long-term trend. Now the final instrument is gold. Now here again, based on the higher time frame chart, I've applied horizontal levels of support and resistance here. I've also applied long-term Fib extension plotted on 3 monthly chart. So this is the first bull run corrective pattern down. Now we got some interesting extension levels here. So the first level is around 2587. So I've been talking about this level in my previous videos. So gold remains bullish. 2587, 2570 is the next target zone for the buyers. And I'm moving to now weekly chart. So this was just to calculate the bullish target on the basis of longer term bullish cycle. Otherwise, I generally do not check 3 monthly chart. Now I'm starting from weekly here. Now, if you notice on the weekly chart, the lines which I have taken, horizontal lines, they have perfectly worked as support or resistance on time to time basis, and this is the extension cycle I'm going to plot Fib extension on. So here we have already reached 161. Once market reached 161, It was expected to correct downwards and come back to fib extension 100, but it didn't happen. Gold remained sideways for many weeks, couple of weeks, and now again I can see that buyers are picking up momentum here. So if 161 level is broken, if 2442 is broken, then the next stoppage is at 2587. Now on the basis of histogram, I do not see any bearish divergence here because we've been getting higher high formation all throughout. Even on the histogram, the latest high is coming on the latest higher high pattern is also visible on histogram and MACD lines. So there is no weakness on histogram or MACD lines. Market remains bullish on weekly time frame basis. Now moving back to daily, on daily I can see there is a pattern of higher lows, low, higher low, higher low, higher low. Next consolidation with higher low, and this was again sideways consolidation. Worst case scenario, we may get short-term correction again inside this range, and finally bullish breakout. Best case scenario, the current breakout should be taken as a valid breakout, and I do not see any problem for the buyers on the basis of MACD histogram. MACD histogram remains clearly bullish. On daily time frame, the market is above the rising trend line of the daily frame. This is the rising trend line I'm talking about. But in case if market gets sideways, I'm expecting that market can move sideways and it can intersect, or it can come very close to the rising trend line and then continue its bullish direction. And moving to 4-hourly chart. Now here we go on the 4-hourly chart, and I can see again double bottom here, followed by consolidation, higher low formed, next higher low formed, and the new higher low formed. Now on the basis of higher highs, we need to compare if we have bearish divergence or not. So I'm going to compare the last two highs here. So basis histogram, there is no divergence. MACD lines, they have not yet completed any bearish divergence. In case if we see short-term weakness building up, it should be temporary. Ultimately, in the longer run, gold remains bullish. Now the important levels which I'm going to mark on 4-hourly chart are, give me a second here, I'll use horizontal line tool. So here we have an important level at 2375 and 2391, followed by 2295. This was the consolidation, short-term consolidation in between around 2321, 2335. So these are the important levels of support. In case gold goes lower, these levels should be taken as an important level to get into the bullish setup. Do not opt for short selling. It's going to be aggressive against the high time frame. So the first target should be 2442, followed by higher time frame target, that is 2580. In case if you want to check the levels in between 2442 to 2580, then I need to apply one more extension here on the current bullish pattern visible on 4-hourly chart. In this case, I'll be using this as my starting point, the low visible here. I'll be connecting to the high at 2391, and I'll be joining with the higher low formed here. So we have reached fib extension 61.8, currently at 2416, which is playing as the temporary resistance. I need to change the color here. Maybe I can use golden color here. Okay, so 2416 followed by 2453. After 2453, it will have 2513 as resistance and 2550. Ultimate target is going to be 2576 or 2580. So this is a plan, trading plan for my coming week, and I hope it works for you and it adds value to your trading plan as well. And have a nice and profitable trading week ahead. Bye-bye.